Hello everyone, this is Madhvi Mehta from Kotak Securities Commodity Research Team and I welcome you all to another session of Commodity Catch-up where we'll discuss major market developments as well as price outlook for major non-agriculture commodities. Well, it was a good week for commodities and we saw gains across the board on back of weakness in US dollar and improved risk sentiment. While most commodities ended higher, some of the highlights were gold, which breached the pivotal 1800 level and tested 1-month high. Zinc prices zoomed to 2-month high while copper topped 8,000 level. The US dollar index ended lower for the week, marking its third decline in last 4 weeks and tested the lowest level since late June. The US dollar weakened on Fed's monetary tightening debate, lower bond yields and reduced safe haven buying. Equities were also on a stronger footing. US DJI index ended higher, marking its third gain in 4 weeks. Chinese equities also rose for the first time in 3 weeks. So overall, it was a week where market players shunned the safety of US dollar and moved to riskier assets like commodities and equities. Risk sentiment improved as US inflation data showed easing price pressure. Both CPI and PPI data released last week showed that price pressure eased last month. US consumer sentiment data also showed that one-year inflation expectation has improved further. The Fed has been raising interest rates since March to get inflation under control. With inflation showing some signs of improvement, market players have become hopeful that the central bank may slow down the pace of rate hikes. We saw some volatility as a number of Fed officials reaffirmed that interest rate hikes may continue as inflation is still out of control. Risk sentiment, however, remains strong as market players become hopeful that at least the worst phase of monetary tightening is over. While focus was largely on the US, inflation data from India, China, Brazil, Germany, and Japan also showed some improvement in the price situation. The recent trend in financial market shows that market expectation for inflation and the global economy has improved. However, there are challenges and we may see volatility continuing. We may continue to see market players reacting to economic numbers and central bank comments to determine the next move by central banks. The next trigger may come from minutes of Fed's July meeting, which will be released in the coming week. Fed officials have maintained the need to continue with rate hikes, and we may not see much deviation from it. Inflation data from UK and Eurozone may also help form monetary tightening expectation after the sharp rate hikes in last few days. China will also remain in focus as market players assess economic health as well as the virus situation. Key data this week includes industrial production and retail sales, and forecast indicates some signs of improvement. China's virus concerns are unlikely to subside soon due to strict adherence to zero COVID policy. US-China tensions over Taiwan are also high and any further escalations may impact risk sentiment. Russia-Ukraine war may also remain in focus as market players try to determine Europe's energy situation, which threatens to impact economic activity, including production by smelters. Let us now discuss individual commodities. We'll start with gold. Gold rose for the fourth consecutive week and scaled the $1,800 level, gaining support from weaker US dollar and lower bond yields. Gold rally, however, remained challenged by weaker investor interest and concerns about consumer demand in India and China. Gold has managed to hold near 1800 level, which shows strong momentum. However, with Fed emphasizing on continuing rate hikes, we do not expect a sustained rise. Moving to silver, silver also rose last week amid concurrent gains in gold and industrial metals. However, ETF outflows showed that investors are using higher prices to exit the market. Silver may remain under pressure as Fed's tightening stance and concerns about China may challenge gold and industrial metals. In industrial metals, copper jumped to a 6-week high on weaker US dollar and supply concerns as one of China's top producers cut production due to reduced electricity supply. Going ahead, copper may consolidate in a range as market players await more clarity on Fed as well as China's economic numbers. Aluminium jumped to 2-month high as Europe's energy crisis and power shortages in China fueled supply concerns. Improved Chinese auto sales data also lent some support to prices. While energy concerns and tighter stocks at LME and SHFE warehouses may continue to support aluminium prices, we may see some correction amid signs of weaker construction demand in China. Zinc was again the best performer in the sector and benefited from supply risk as Glencore warned about decreasing profitability of European smelters amid rising energy costs. Tightness in physical market was also evident with cash prices trading at a premium of more than $125 to 3-month forwards. Going ahead, zinc may consolidate in a range as support from Europe's energy crisis may be countered by sluggish activity in China's steel sector. Lead also ended higher, gaining support from power rationing in some parts of China. Going ahead, lead may come under pressure amid slower pickup in replacement demand for acid batteries in China. Moving to energy complex, Nymex Crude edged up last week amid weaker US dollar, gains in US equity market, improvement in US gasoline demand, and temporary supply disruption relating to Russia and Gulf of Mexico. Weighing on price was sharp rise in US crude oil stocks and demand concerns amid slower economic activity and China's virus concerns. Crude has recovered from recent lows, indicating that a near-term bottom remains in place. However, demand concerns may keep pressure on prices. Lastly, natural gas rallied sharply last week amid higher European gas prices, recovery in crude oil, robust US cooling demand, and temporary supply disruptions. However, weighing on price was a bigger than expected rise in stocks and forecast of less severe weather in US. Natural gas may remain choppy amid mixed factors. However, tightness in US and global market may keep prices supported. Well, that's it from my end. I wish you all a very happy trading week. Thank you.